Every business has a bank account. Every business has a bank account. Okay, and so once the business has a bank account, any transaction that involves checks will be recorded in that account. In the same way, you would realize that the business as a separate legal entity has the cash book. And if you recall the cash book, we have the 3-column cash book. Okay, we have the 3-column cash book. People, just a minute, they have to pick my son from school. Let me just make sure he has been picked. Just give me a minute. Let me send him. Saying that in the cash book, every business has the in the cash book, okay, sorry about that. In the cash book, we also have a bank column. Okay, let's recall the 3-column cash book, where we have a column for bank transactions. And so we are recording our bank transactions. The bank also has an account in our names, the name of the business, and it's also doing its own recording. Now we expect that at the end of the month or periodically, when we go for our bank statement, the balance on our bank statement should be equal, okay, with the balance on the bank column of our cash book. But that may not necessarily be the case, okay? And so this topic seeks to help us understand why that is not the case and how we can rectify it. So at the end of the session, we would be able to explain, okay, why bank reconciliation is necessary, the main causes of the discrepancy, and then we'll identify reasons why checks are dishonored. Okay, so that is what we want to do. So we'll reconcile the cash book with the bank statement. We would explain the need for bank reconciliation and identify the main causes of it. We have our reading text. Yes, Samuel. Samuel, what are you doing in this class? Yes, Samuel. Samuel. Samuel's hand is up. Samuel. Samuel, we can't hear you. Okay, type your question because I can't hear you. Now, anytime amounts are paid, okay, into the business bank account, okay, the bank will credit the account. Remember our cash book. So let me use Ascertain again. So we sold goods to Ascertain. Ascertain pays us by check. What are the entries? Ordinarily, I expect that everybody will know that we would debit our bank column of the cash book and credit Ascertain's account. That is a transaction on its own. Now, immediately, the or die be die picks that check and sends it to the bank. What transaction takes place there? The bank would also be receiving that check, okay, in their bank account and will credit Ascertain, will credit or die be die's account in the bank. That is a separate transaction. So at the bank, when all die be die sends that check to the bank, okay, the bank will debit their account, bank account, and credit all die be die's account with the bank, because that money belongs to a third party in the name of all die be die, who will be captured as a liability at the bank, okay? But if you look at the transaction between all die be die and the bank, you would realize also that whilst all die be die's cash bank column of the cash book is being debited, all die be die's current account in the bank is being credited. But those are two separate transactions, okay? So, but that is what happens. Okay, so that is what happens. Okay, so sorry to interrupt the class, but in the other class, they didn't give me the figure for the trial balance, and I asked them to go back and do it. They are giving me 124,900. Let me respond to the guy, Samuel. Samuel, pick the figure. The figure the other classes gave me is 1243200. If Sana is online, you can also pick this 1243200. And not 1249. Okay, it's 1243200. Samuel, so Samuel notes that 1243200. Okay. Okay. So that is what happens. Anytime a business entity receives a check, it will enter it in the bank column, the debit side. When it goes to the bank, the business entity has an account in the bank. The bank will treat it as a liability because the account is for third parties. And so that will be a credit in the books of the bank. Okay, but if you look at the way it is entered, somebody would assume that, okay, whilst the cash book is being debited, the business is being credited. But that is not the same double entry, so don't get confused. Okay, in a similar way, when checks are drawn, so when we issue a check to Susie, okay, in our cash book, the bank column of the cash book, we will credit our cash book and debit Susie. When Susie sends that check to the bank, the account of all die be die, okay, will be debited, and Susie's account will be credited. So anytime checks are drawn, the bank account, okay, of the business will be debited, okay, whilst here we are crediting the cash book in the books of the business. Now that appears on the opposite side. So one thing we must note is that what appears on the debit side of our cash book, if we have our bank statement as a business, it will appear on the credit side of the bank statement. What appears on the credit side of our cash book will appear on the debit side of the bank statement when the bank finally gives us the statement. It follows that all things being equal, the two books, that is our bank column of the cash book and our bank balance from our bank statement, should agree. But I'm saying that it is not always the case, okay? There may be discrepancies between the two for which we need to reconcile at every time. We need to do a reconciliation to reconcile. Now, what causes the discrepancy or the differences between these two records? There are two main, please take note, I said there are two main causes of this discrepancy: informational issues and timing issues. Okay, these are the two main causes of the differences between our cash book. And by the way, let me say that when I say our cash book, I'm referring to the bank column of our cash book. Remember, we did 3-column cash book, was bank. The differences between the balance on our cash book bank column and the balance on our current account in the bank. And I'm saying that it is either informational or timing differences. What does it mean when we say information? It's because there are certain transactions that happen in the bank that the bank didn't give us information. So as a business entity, we are not aware until we go and pick our bank statement or until the bank gives us their statement, then we become aware. So it is only when we become aware that we can enter those transactions in our cash book. So those we are referred to as informational issues. Okay. 2, timing differences. Okay. These arise because of the different times that we send checks or the bank records items in our current account. Okay, either the bank didn't record it at the said time, or we also did not proceed with it at the said time, at an appropriate time. Okay, so these are the two main causes. Now let's quickly go through them. The first one is the timing differences. And we are saying that what could cause a timing difference? The first one is what we call the unpresented checks. Now, let me say that when we say unpresented, these are checks that the business entity has issued to its suppliers. So for instance, UGBS has issued a check to Susie. Tomorrow is 30th April. UGBS issued the check today. Now, immediately UGBS issued the check to Susie, and Susie picks it up. We will enter it in our books. We will credit our bank account and debit Susie's account. Transaction complete. But if Susie sends the check away and decides that tomorrow I don't have time, I would only send the check later. If we pick our bank statement tomorrow, it means that that check will not show on our bank statement. So we capture it as unpresented. Susie has not yet presented the check. So we have issued it out, but our supplier has not yet presented it. Or, okay, he has presented it, and for those who know clearing system, okay, it takes about 3 days sometimes if the check we have given is from a different bank. So let me assume that Susie's bank is GCB. Meanwhile, UGBS bankers are EcoBank. So it means that UGBS has given an EcoBank check to Susie. If Susie goes to pay in the check tomorrow at 4:30 or at 3:30, it means that that check cannot go through to UGBS bank at EcoBank for them to pay before they send the information to Susie, to Susie's bank at GCB. So it would be identified as unpresented, okay? Even though Susie may have presented it, because they are different banks and it has to go through the clearing system to make sure that UGBS has money, that check has not been cleared, okay, as haven't been paid. So it is a timing difference. 2, uncredited. So this time, the business entity has received checks, but also either forgot or are yet to go and put them in the bank. So again, tomorrow is Friday. Ascertain brings us a check, but brings the check at 3 p.m. Okay, and then the cashier is very busy and cannot go to the bank. It only means that the cashier would send the check at the next banking day. Okay, so we have received the check. We would debit our bank account and credit Ascertain. But if we pick our bank statement tomorrow, we will not find that check. But in our cash book, in our bank column of the cash book, that check has been there. So it means that our bank account has not yet been credited with that check. So it is uncredited checks. Uncredited checks. Then we also have bank errors. Okay, sometimes the banks will mistakenly put somebody's money into our account. Mistakenly, they'll credit our current account. Okay, be rest assured that when they find, they'll come and reverse the entry. Okay, but for the moment, they haven't seen it and it's showing on our bank account. That is an error. Or they would put in a wrong debit. Okay, if we go for our bank statement and it is there, we would have to treat it. But later, when the banks find out, they would correct it. So these are the 3 main types of, or the causes under the timing differences. Then the informational differences. Okay, like I did mention, is because we don't have information. We don't have information about certain transactions that the bank has undertaken on our behalf. And we can only know that those transactions when we go for our bank statement. So examples are standing order. A standing order is just a written instruction to the bank to pay on a regular basis a fixed amount of money. Sometimes the banks will do it, but you as a business entity, you don't know when they are going to do it. Okay, you may know the amount, but you don't know when they will put it through. So it is a standing order, and until they do it and you see it, you cannot enter it into your records. 2, a direct debit. There are certain transactions or instructions we have given. So at the end of the month, they will just debit your account. And I'll tell insurance. Okay, so for instance, I have taken an insurance. And so at the end of every month, they just debit my account with the insurance premium, the amount I have to pay, okay, into an account. So that is a direct debit. Okay, a credit transfer. Sometimes customers, okay, may Rebecca, I'll address your issue, okay? So credit transfers, sometimes some of our customers will transfer the money, especially today, okay? In this day and age when everything has gone electronic, okay? You can sit in the comfort of your home if you have applied for the internet banking and all those things to just transfer money. Today, people are even using Momo, okay, to transfer money from one account to the other. And so if such a situation happens, the business entity is sitting somewhere and does not even know that my customer has transferred money into my account, okay? And so it is only when they pick the bank statement that they would know who transferred the money. Again, we have bank charges, okay? These are charges by the bank for the service they have rendered. And it is, you don't know the amount, though you know it at the end of every month. Okay, and it is only when you pick your bank statement that you know the amount. The last one is dishonored checks. Okay, dishonored checks. Now, dishonored checks are just checks that we have sent to the bank, but the bank could not pay, either because of various reasons. Okay, so we have presented a check to the bank, but the bank could not pay. Okay, and so it is dishonored. Now, there may be various reasons why the banks will dishonor a check. Okay, and it could be because the check is stale. What does a stale check mean? What does it mean? Stale check. Now, I'll answer your question shortly, okay? Stale check. Who can tell us what a stale check is? Hey, are we in class? Jamira too. Isa. Jamira too. Yes, yeah, done so.
Madam, a stale check is a check that, like, maybe they have given you a date to go and cash it out, and that date has elapsed. So the check becomes stale, or if the date is not specified, for after a period of 6 months, it becomes useless.
Okay, so a stale check is just a check that has been issued. Normally, it's been issued out. Okay, and so they count from the date on the check. It's been issued for 6 months. Okay, after 6 months, it becomes stale. It means it is outdated, it has expired. Okay, and that is a stale check. So it is an outdated check. It can no longer be honored. Okay, so once somebody gives you a check and you hold on to it for 6 months, it will be dishonored. Insufficient funds. Yes.
Madam, please, I wanted to ask the difference between standing order and direct debit.
A standing order, you would have given the instructions to the bank. Okay, a written instruction to the bank. Sometimes, most often, a standing order, the amount is fixed. So I have a standing order for my mom. Every month, okay, a fixed amount is taken out and sent to her account. So that is a standing order. You have given a standing instruction. So it holds to you right back to the bank and say stop. Okay. Whilst a direct debit, okay, is a debit from an institution. And I gave an example of an insurance. So I have an insurance policy, and at the end of every month, okay, I've asked them to send the debits, my premium charges to my bank account. This time, I've given it to the insurance company, not to the bank. Okay, so the
madam.
Yeah, okay. Now, are you the one who asked the question?
Yes, madam.
Okay, so your hand should go down. And somebody, so let me go to the chat. There was a question in the chat. So somebody asked a question, I was going to address it. Okay, so Rebecca says some banks pay the salaries of government workers even before the government pays. No, that is an internal transaction, Rebecca. If the bank pays before the government pays, that one, it is the bank who wants to do it. Okay, it has nothing to do with the transactions. Okay, that it has nothing to do with the bank account. That one, I'm sure that the government would have asked the bank to do an amount to pay before they bring the money. But a business entity, if a business entity wants a bank to pay salaries, then it means that the business entity is taking an overdraft. But that cannot be a standing order. A standing order, you must write out instructions. Okay. Be careful. The person who drew on on my screen. Be careful. So insufficient funds, checks can be dishonored because the one who issued the check does not have enough funds in the accounts. Insufficient mandate refers to the situation where the business mandate, so the mandate is who has to sign, okay, who is supposed to sign. And in some businesses, they have more than one signatories. So if you bring a check with only one signatory, whilst your instruction to the bank is for 2 people to sign, then, okay, then the bank will say there is insufficient mandate, okay? There is insufficient mandate. Okay, amount in words different from amount in figures, okay? Most often, amount in words, okay, when it is different from amount in figures, there is a problem. And so most banks may not honor it. Though sometimes people will suggest that you should pay the amount in words because that is what the person has intentionally written, okay? But if the figure is huge, banks may not honor it. Post-data check is a check that has been issued in advance and the date is not yet due, okay? No signature of the account holder, and then signature differs from the bank, okay? From the bank specimen, okay? So any questions? So these are the reasons why a bank would dishonor a check, okay? These are the reasons why a bank would dishonor a check. Any question? Yes, Ohene. Ohene, your hand is up.
Yes, please. Please, madam. If our debtors pay money into our accounts.
Ohene, speak up, speak up.
I'll take a bank reconciliation statement. Assuming our debtors pay money into our accounts, we don't take a bank reconciliation statement.
Ohene, you are talking to yourself. Oh. You speak up more, then your voice goes down, so I can't hear.
This madam, my
Ohene, I can't even hear anything again. Ohene, or you want to type? Okay, you can also type. You have muted yourself now. So kindly type if you're more comfortable with that. Okay. Okay, so whilst we wait for Ohene's question, okay, why do we need to prepare a reconciliation statement? So I've just told you why the balance on the cash book, the bank column of the cash book, and the balance on our bank statement may not agree, okay? And the question is, why do we need to prepare a bank statement? Who can tell us why we need to do the reconciliation on a regular basis? Yes, why do we need to reconcile the bank statement balance and the cash book balance? Yes, who will help us out? Let me see. Who will help us? Yes, Justice.
Madam, please, to remediate the difference between the cash book and the bank statement.
Okay, to correct the difference. What else? What else? Why would we have to do that?
Madam,
Yes.
Please, to mitigate fraud.
To mitigate fraud? Okay, perhaps people are entering in wrongly to mitigate fraud. What else? Yes, Christopher. Christopher. Christopher, your hand is up. It gives a true reflection of the business assets from Rebecca. Good. Lowell, yes, Lowell.
Yeah, Madam, please, it helps prevent the overstatement or understatement of the bank.
It helps to prevent an over or understatement of our cash at the bank. Okay, so perhaps in our cash book, we have more money, but you go to the bank, you issue a check, and the check goes and it bounces and they dishonor it. That is shameful, okay? Or you think you have less money and you are thinking of borrowing, meanwhile you have more money at the bank. So to avoid these challenges, we need to do a reconciliation on a regular basis so we can agree the cash book balance with the bank statement balance. Now, who prepares this or who should prepare it? Ordinarily, who should prepare it?
If they won't come, they will find.
Afesi Apia, who is talking? Who should prepare the bank reconciliation statement?
The bank, madam, the business.
The business.
Madam, the business.
Madam, the accountant of the business.
Yeah, the
accountant of the business. Good. The accountant of the business. Because we need it, not the bank. Okay. The accountant of the business. Who is disturbing the class? Donne. Okay, so the accountant should prepare the accountant of your business, okay, an account officer or anybody should prepare. So how do we prepare that? Ohini, I did mention from the word go. If your debtors pay an amount into the bank account, okay, if it is cash that they paid, you record it in your cash book. But once it goes to the bank, it must go into the bank column of the cash book. So when I'm talking about the cash book, I'm always referring to the bank column of the cash book. And I've made this very, very clear. Okay, anytime we are talking about bank reconciliation, we are talking about the bank column of the cash book. Okay, so if your debtors pay cash into the bank, your bank account, you must put it under your bank column. They didn't bring the cash to you. If they bring the cash to the business, you put it under the cash column. Okay, yes, Paul, your hand is up.
Madam, please, the unpresented checks, are they also known as uncollected checks or outstanding checks?
Why uncollected? I am saying that they have collected it, they've gone, but they have not sent it to the bank. So it cannot be uncollected.
Madam, please, I saw a question like that, and it was they wrote uncollected. I didn't know where to put it, whether I should put it as uncredited or unpresented.
You saw it at where?
Frank Hood.
Which Frank Hood? Is it uncollectible debt that you are referring to as uncollected?
No, they wrote uncollected checks.
And the bank reconciliation?
Yes.
Uncollected checks may be different. So in that case, it means that maybe the business has issued checks to its suppliers, but the suppliers have not come to pick it up.
Madam, what about outstanding checks? When they use those synonyms, I don't always get it.
It is just the meaning as you see it. So if it has not been collected, so if I issue a check to you as a business entity and the check is still with me, you haven't collected it, so it can be uncollected checks. And then say the second one is what?
Outstanding.
Outstanding checks. It means there are checks you have to write that you have not yet written out. Okay, you have to pay some suppliers. You maybe because there is no money in your account, you are holding on to it, and businesses normally do it. Maybe you are supposed to pay at the end of the month. You have a list of suppliers and people you have to issue checks to, but because you don't have money in your account, you're also expecting some money. So those checks become outstanding. It means you are yet to issue those checks. Are you okay? But if you are yet to issue them, you have not issued them and you have not handed them over. So they'll know a transaction has not yet happened. The only point where you can say a transaction has happened is where you have issued the check to the person and the person has collected it. But if you issue the check and the customer or the supplier has not come for it, unless the supplier says, I'm coming, so you issue it down. Normally, so that is why when they come, they give you a receipt to show, acknowledge that they have. And that is where a transaction occurs. Okay? But collected it. No transaction has occurred. So that is it. Because the person must give you a receipt and that will signify the transaction, and that is evidence of having paid. Okay, so you cannot just write the check and quickly go to your records and go and pass double entry. Okay. So that is it. I hope I've cleared your issue.
Yes, please.
Okay, so now how do we go about that reconciliation process? The first thing we have to do, and mindful of the fact that we cannot ask the bank to change any figure on the bank statement. So everything we are doing must be from the business perspective. We have to do the reconciliation. The bank does not and cannot. Otherwise, then the workload on the bank, they cannot contain it. Okay, and that is why at the end of every month, it is required that businesses go for their bank statement so you can do your reconciliation. The banks cannot and do not do reconciliation. So the business has to do it. And so the first thing you have to do is to adjust the cash book, your cash book, with informational differences. Now, give me all the informational differences. Ben, give me one informational difference. Bismarck, one informational difference. Bismarck Adai, one informational difference. Mary Appiah, one informational difference.
But I'm standing orders.
Standing orders, okay. Peter Najem, one informational difference. Are all these people in the class?
Yes.
We are in the class. I'm coming, madam. I'm coming.
Edu Ekins, one informational difference.
Direct debit.
Adelaide Richter, one informational difference. We have just finished talking about it and you cannot remember.
Madam, credit transfers.
You've gone to check. So, Bridget, one informational difference. Bridget.
Hey, Madam,
Celestine Dentra, one informational difference. Glenn Buffett, one informational difference.
And bank charges.
Bank charges. Isaac Cobain, one informational difference.
Madam, dishonored checks.
Dishonored checks. Kenneth Amankwa, one informational difference.
Marriage debit.
Madam, dividends received.
I can't hear.
Hello.
Chris Lamate, one timing difference. Chris Lamate, one timing difference. Magdalene Saba, one timing difference. Nana Che Frimpong, one timing difference. So it means that
Madam, bank errors.
So all of you are in the class hoping that on Tuesday, everybody will come on because it means you people are not in class. You just log on and do other things. So when I'm mentioning people's names, they don't even know where they are and they cannot even think of what we are doing. Okay, so these informational differences are used to update the cash book. Okay, and I did mention that informational differences are the issues, okay, or are the transactions that have occurred or that have been taken care of by the bank for which the business entity has no knowledge of. It has no information about it until it goes to pick its bank statement. Why? Because the banks have not provided that information to the business, okay? So what do? You bring down the balance of the original cash book, okay? And then on the credit side, you enter all items, okay, that will reduce the cash of the business entity. For instance, bank charges, a direct debit, okay? And then on the debit side of the cash book, all the items that will increase your cash balance. A credit transfer into your account will increase your cash balance. Okay, interest will increase your cash, it would increase your cash balance. So once you have finished with all items on the bank statement that do not appear in your cash book, then you have a new balance on your cash book. And that is what we refer to as the adjusted cash book balance. Okay, then you prepare a reconciliation statement. Let us note that it is, we want to reconcile the cash book balance, that is the bank column of the cash book, to the bank statement balance. We cannot expect the bank to change their figures to reflect ours. We as a business entity would have to reconcile it to reflect the balance at the bank, okay? And so the reconciliation statement, you would have to prepare it using the timing differences. And that is as simple as that. So you must know that the adjusted cash book is, the cash book is adjusted with informational differences. Where do we get informational differences from? From the bank statement. Then the bank reconciliation statement is prepared using the timing differences. Where do we get the timing differences from? From the cash book. So these are items in the cash book that are not on the bank statement. Okay, and those are timing differences. Items in the cash book and not on the bank statement. And then the errors which are on the bank statement and not in the cash book. Okay, so we use that to prepare the reconciliation statement. Any question before I project a simple question and a simple way of doing it? So this is the format for the bank reconciliation statement. The balance, you start with the new balance for the cash book. You add all unpresented checks. Why are we adding unpresented checks? Because in our cash book, when we issue a check, we credit our bank column and debit the supplier. And the supplier takes the check away. But if the supplier does not present it at the bank, we would have to assume. Remember, we want to balance, the business wants to agree its balance with that of the bank. So if that check we have given to the supplier has not reflected on our bank statement, then we must also add it back to our cash book. When we issued it out to the supplier, we credited our cash book. So we reduced our cash book. Now, because it has not been sent to the bank, to reduce our bank balance, it means we have to assume that that check has not gone through the books. That is why we add it back. Okay, we add it back. Again, if the bank has wrongly credited our bank account, our current account at the bank with an amount, it would increase our bank balance. So our cash book, we want to agree the balance with the bank statement balance. So we have to also add it to our cash book. Of course, later when it is corrected, we will do the correction again. Okay, so we add it. Now, uncredited checks are checks that we are holding on to, that we have not sent it to the bank. But in our cash book, we have recorded it on the debit side of our bank balance, of our bank column. So we have to assume that we have not received it because we haven't sent it to the bank. And remember, we want to agree with the bank balance. So at that point, we would also, okay, reduce it by, okay, subtracting it from our cash balance, and then the wrong debits reduce our cash balance. So we'll also reduce it so that we can agree with the balance on the bank statement. Okay, any question? We have just about 10 minutes more. I'm going to project a very simplified question. I was looking for a question on this. I didn't get it. I'll send it in the course.
Hello, madam.
Of the week, yes.
Yeah, please, madam. When we started earlier, you said you have a standing order at a particular bank. So I want to ask that, is it only accountant of a business that prepare a bank reconciliation statement? Since individuals are also having an account at the bank.
Oh, no. It's because I was talking from the business perspective. Okay, so all of us who have accounts, the same thing can happen. You know, sometimes for people, individual account, sometimes you have a fair idea of your amount. And if you don't transact businesses very often, okay, so let me assume maybe students, maybe all that goes into your account is your monthly allowance from your parents. So you know your balance. If you go and you request for your balance and they give you a wrong balance, or you go to ATM and it gives you a wrong balance, you know it. Okay, so most often individuals do the reconciliation, if I should say, in their head. But you can also do it. That is if you keep your expenditure, okay, and you know that on this day, this is the money I had. This and this and this, I went to ATM, I took this. you can also do your reconciliation. But I use the accountant or the account officer because if you take a business like Unilever, okay, most often it is companies that have a lot of customers. Take companies like Unilever, Nestle, Coca-Cola. They are distributors, okay? They are wholesalers who sell their products on wholesale basis to big time people. So they have a lot of customers and a lot of suppliers. So if these customers are paying, some are doing credit transfers, some are bringing checks to the organization, some go and pay the checks in themselves. Sometimes it is very easy to miss out on this, okay? Because the client or the account officer in charge of each customer would also have to reconcile with the customer's records. So if a customer transfers money into the business bank account, until the customer comes to inform the business, their records will not be updated. And sometimes it's only when you pick the bank statement, okay, that you can tell. It's just like people paying your school fees. When you pay, the university says, give me how many hours? 48 hours. So that 48 hours, they pull out the statement from the bank and then transfer each into everybody's account, university accounts, okay, to update it. And then they allow the system to enable you to register. So this reconciliation can be done at any point, okay? But for this one, I mentioned the accounts officer just because they are the ones who mostly, okay, in these big companies, they are the ones who would always. So let me show you how.
Please, Madam.
Yes.
Please, for the examples of the informational differences, can you say that uncredited check is an example? Since maybe a customer is owing a business entity and that customer decided to issue a check to a bank for the bank to credit that particular business entity.
Who is talking? Your line is breaking.
Madam Solomon.
Yes, Solomon, at a point I lost you.
Yeah, Madam, I was saying that the informational differences, can you say uncredited check is an example? Let's say a customer is owing a business entity and that particular customer decided to issue a check to a bank for that particular bank to credit the business entity, and the bank refused to do it. So can you say that the informational differences on uncredited check is an example of informational differences?
But why would the bank refuse to do it? If you are paying, some business a check, if you take it, the bank has a process for you to credit the account. So the bank cannot refuse that, they will not credit it. You are not going to ask the bank, I've got a check, do it for me. No, you have a form you have to fill and you send it out. And then the check is effected and it goes through the clearing system. Okay, but that cannot be informational. That will be the form of a transfer. Okay, even though you paid in a check, but if that information is not sent to the business, then it will be an informational difference. But the name cannot be uncredited checks, because uncredited checks is only used to refer to checks that the business has received but has not sent them to the bank to put in its account. So we are saying it has not been credited to the bank account. And that is why it has the name uncredited, okay? But if a customer goes to the bank and says, I have a check for business school, you will not say, keep it and put it in for the business school. You go through the process and credit business school's account. Okay, you will not leave it with the bank to do it on your behalf. Okay, the bank is not required to do that. Okay, neither would you go and say, I have cash. Please take the cash. I'm going, pay in for me. That is temptation to the bank officials. And there have been a lot of instances when they have squandered the money, okay, and people assume they have done it. So That is not ideal. That is why the process is there. You go, you take the form, you fill, and you do it. Okay? Okay, so whoever is talking, if you don't want to be part of the class, Daisy Lynn, Ahin. Daisy.
Yes, madam.
You are the one, are you the one disturbing me?
No, please.
Somebody is talking behind there in your room. So, okay, so let's quickly do this. So this is the nature of the cash book. And we are referring to the bank column of the cash book. We already know how to rule the cash book. The debit side will represent an increase in cash in the bank, and the credit side will represent a decrease. This we already know. This is how the bank statement is, okay? So you have debit and credit, and we are saying that in the bank statement, the debit represents a decrease in your bank balance, in the amount you have at the bank, whilst the credit side represents an increase. And so if you look at it, they are opposites. In the cash book, the debit side represents an increase. In the bank statement, the credit side represents an increase. In the cash book, the credit side represents a decrease. In the bank statement, the debit side represents a decrease. So they are opposites, and so you must note that, okay? Now, this is a question that we want to quickly go through. I couldn't find a question. I'll look for a question and send to you. So this is a question. There are times you have questions like this. The cash book ruled this way and the bank statement this way. When the question comes this way, it is very easy. All you have to do is to match the items on the right-hand side, on the debit side of the cash book to the credit side of the bank statement. And then you match the credit side of the cash book to the debit side of the bank statement. And so items that are not there would now tell you whether, then you have to group them, whether it is informational or it is timing difference. Okay, so we are going to quickly do that. I know it's time and people have other class. The video will be made available. I would also post a question for us to go through on bank reconciliation statement. Okay, but we'll quickly go through it. Yes, Justice.
Madam, please, any update on the IA?
Justice, when did you join?
I was late, so a little bit.
Okay, so talk to your friends. The word, I'm not going to talk. I've already talked about IA.
Okay.
So I need to finish this. So W. Lee, on the debit side, the balances are not parts. So this is our cash book. And if you look at it on top there, it has bank column. Okay, it has the bank column of the cash book. Okay, so look at the debit side, W. Lee, 3rd December. Do we have it there? Hello, do we have it there?
No, madam.
Are you sure?
Yeah.
Are we
Madam,
sure?
please, we have it there.
We have it there. Good. So it's knocked off. Then T-Chang, 2000. Do we have it there?
Yes, madam.
Yes, madam.
Okay. And what is happening on the debit side of the cash book? What do we enter on the debit side of our cash book?
And is it that
check received?
Checks received. Good. So checks received are on the debit side. So you'd realize that the narration in the bank statement is check deposit, okay, which is credit. So when we receive it, we go to the bank and deposit it. Okay. Now 30th, 1,400. Do we have it here?
No. Madam, please, no.
Okay, so,
no, madam.
So we identify that. And what name would we give to this 1,000 for? We have received it, but we have not gone to deposit it. So what name would we give?
Madam, unpresented.
What name would we give?
Madam, unpresented.
Okay, so let me correct you. It is uncredited. Okay, so we have received it, but we have not gone to the bank to deposit it for account to be credited. So it is uncredited check. Okay, uncredited. Okay, so that is it. Then we go to the other side. So uncredited check, what is it? Is it a timing or informational difference?
Timely.
Good, it's a timing difference. Okay, so once you know it's a timing difference, where would we find it? In the bank reconciliation statement. Then we come to the credit side of the cash book. K1, so what do we enter on the credit side of the cash book?
Payments.
Checks we have issued to suppliers. Okay, checks we have issued to suppliers. Good. So we expect that on the bank statement, it to be on the debit side because it will be reducing our balance. Okay, so 1,006. Is it there?
Yes, madam.
So check number, it means we paid. 700, is it there?
Yes, madam.
Yes, madam.
Yes, madam.
Okay, good. 100 cedis, is it there?
No, madam.
So no, madam. What does it mean?
It means unpresented check.
Unpresented.
So it means we have issued a check to M-Tank for 100, but M-Tank is yet to send it to cash it. The bank to cash it. Good. So M-Tank has not yet presented it. So that is unpresented check. Good. So that is it. Then we come to the bank statement. Okay. So if you had a pencil in exams and you had a question like this, you would have been striking out those that have corresponding figures. But because we don't have, we'll go through the bank statements again. So the debit side, check 1,006. Do we have it in the cash book?
Yes, madam.
Okay, the 2,000.
No.
The 2,000 is what?
No. Dishonored check.
We don't have it, dishonored check. So what does it belong? Informational or timing? Informational. So you see, the 2,000 check that T-Chunk gave to us and we deposited on the 10, it has been dishonored, but the bank has not informed us. So as at 31st December, we are not aware. So that is informational. Service charge is debit here, should be credit at the bank. Do we have it there?
No.
No. Okay. Auto pay rent, 250. Do we have it?
No.
Where should it be in the cash book?
No.
Where should we be? Where should auto pay rent be in the cash book?
I'm standing order.
Standing order, yeah.
Where should it be? Is it debit or credit?
Madam, credit.
Credit side.
700, is it there?
Yes, madam.
Yes, madam.
Okay, so we are done with that one. Then we come to the credit side of the bank statement. 1,000, is it there?
Yes.
Yes.
2,000, is it there?
Yes,
madam.
Bank interest 50, is it there?
No, madam.
No, madam.
Okay, credit transferred, commission, is it there?
No, madam.
Okay, so you would realize that we have identified all the informational differences. So this question, this is how it has been. So all the ones that have corresponding figures have been highlighted. Okay, so look at it. So all those that are there has been highlighted. So you see SIM uncredited check, M-Tank, the arrow, unpresented, okay? Service charge, bank charges, auto rent, direct debit, okay? The interest, and this one's bank interest credit transfer. So that is how we can identify them and mark them. Then how do we prepare the cash book? So we have to update the cash book. Now, how do we update the cash book? We start with the balance carried down of the bank balance. What balance is this? Is it a debit or a credit balance? Cash
Debit
book,
balance.
It's
Debit
a debit
balance.
balance. Okay, we've told you that the balance, when you bring it down, where it will be is the debit balance. So this is a debit balance. So in the adjusted cash book, we will bring the balance down 4,800. Okay, so we have the 4,800. Then all the transactions that will increase our cash. Indeed, all the transactions that appear on the credit side of the bank statement would increase our cash. So the commission received 300. The bank interest of 50 would increase our cash balance. Dishonored check will reduce the cash balance in the bank. Bank charges will reduce our cash balance. Rent paid will reduce our cash balance. And so we have adjusted the cash book, and we have 2,870 as our new cash balance. Okay, so look at it. We had 4,800 as our cash balance. After taking care of all the informational difference, we have 2,870. So you see, if we had issued checks, knowing that we have 4,800, the checks would have been dishonored. So that is what we do. So all these are informational differences that are used, okay, to adjust or update the bank column of the cash book. Then we prepare the reconciliation statement. And in preparing the reconciliation statement, we must make sure it is as at a date, okay, because reconciliations are done at intervals. Some people do it monthly. I was telling you about the Coca-Cola and the Nestle. So you can imagine if you have all these, okay, wholesalers who are paying in and you refuse to do it, you may not even know what is happening. Okay, so we have the corrected balance as per the cash book. We add back unpresented checks. Remember, we want to agree the balance with the bank balance. So though we have recorded it, we have issued out the check because they have not presented it. Okay, it has not gone to the bank. That is why we also add it back to our cash book. Okay, we also add it back to our cash book. And then we list our bank deposits not yet entered, okay, or the uncredited checks, 1,004, to agree with the 1,570. Now let's go back and see whether our bank balance was 1,570. Can you see the bank balance?
Yes,
madam. It's 1,570. So
yes, madam.
We would have agreed the bank balance, okay, of 1,570 with our cash book, with our new updated cash book balance. Okay, would have reconciled, okay, our statement with the bank balance. Again, let me say that we cannot go and change figures at the bank. So we would have to, okay, prepare the reconciliation to agree the balances with the bank statement balance. Any question? So I'm going to send you a question for you to try, and you must note that it is not always you have it this way. Sometimes the question can come in statement forms, okay, and you must be able to identify which ones are informational differences and which ones are timing differences, okay? And that one is very important. It's not all the time that you have it in the format like this. You can just have statements, and that's what I'm going to send to you. So you try your hands on it and prepare, update the cash book and prepare the bank reconciliation statement. Any question? Yes, Louisa.
Madam, with the first slide, under bank reconciliation statement, balance as per adjusted cash book. And here we have corrected balance in hand as per cash book. Can we interchange or?
Can you do what?
Can we use any of them?
Oh, you just this one is, it doesn't matter. I can use the balance as per adjusted cash book.
Okay. Thank you.
Okay, it's the balance as per adjusted cash book. Okay.
Okay. Thank you.
Okay. Yeah. Any other question? Please don't leave anything unattempted. Next week we are moving back to we are going to continue to prepare our financials. We're going to start doing adjustments. So the ledgers, make sure you understand your ledgers up to the trial balance. We are going to start adjustments to the various accounts. Okay, and by 2 weeks' time, we'll start preparing the financials of a sole proprietor. So please practice, practice, practice. Okay. Yes, Mary.
Madam, please, what if there's a bank overdraft?
There's a bank overdraft. Yes, we'll have to agree. But so once you do it, it will result in an overdraft. That is why we want to agree. So if perhaps the bank has mistakenly debited you and has created an overdraft, as at a point in time, let's assume tomorrow being the end of the month, okay, and you go and pick your bank statement, you must also reconcile to arrive at the overdraft on your account. Though you may not have an overdraft, then you can draw the attention to it.
Okay, madam, thank you.
Okay, then. Any other? Okay, so in the absence of any, I wish you well. Take care, stay safe. Ben, remind me if I don't pose the questions by tomorrow, just send me a reminder. Yes.
Do you have to state like the difference, like if it's a timing or information difference?
If
on
the question
paper
doesn't ask you to state, it is not needed. You only, you would only have to identify it yourself, because you should know by now that timing differences are used to prepare the reconciliation statement, and informational differences are used to adjust the cash book. So if you know that, if there is a question and you have identified it, then you do as it is. This is a very simple control system. Okay.
Thank you.
So I wish you well. Keep practicing, keep working, and I'm sure I would, if we agree any information on the IA date, exact date, I'll let you know. But in the meantime, I'm confident next week, towards the end of the week or weekend, the assessment will be taken, okay? So work hard, and I wish you all the best, okay?
Thank you.
Thank you, madam.